Good morning, everyone. Thank you for joining and supporting the Insurance Society of Philadelphia NextGen Virtual Summer Series. Before getting started, I want to remind everyone that today's session is being closed captioned, so you can add that add the text to the bottom of your screen. Before getting started, just want to take some time to thank everyone who's involved in the planning for the ISOP NextGen Virtual Summer Series. Everyone on the board, on the committee to get this set up, and especially Carmela Robinson and Marianne Hall for really going above and beyond to make this series something special for our little board. My name is Angelina. I'm a corporate underwriting analyst at Philadelphia Insurance Companies and a member of the NextGen board. Today, I'll be moderating the session titled The State of the Growth of the InsurTech Market. With me today is Chris Shultz, who is a director of underwriting at Boost Insurance. Good morning, Chris. How are you today?
Good morning, Nick. I'm doing well. Happy to be here.
Great. Yeah, I'm happy to have you as a panelist today and presenting. Can you tell the audience a little bit about yourself?
Yeah, absolutely. So as Nick mentioned, I'm the director of underwriting at Boost Insurance. We're in InsurTech MGA, focused on enabling companies both in the insurance industry and outside of it to distribute insurance. So we develop our own products, sometimes very innovative stuff, ranging from cyber and BOP to things like crypto insurance and other unique things like parental leave insurance and stuff like that. So we really put together a technology platform, bundle reinsurance sitting behind that, so that and we also serve on the compliance side. We set up all of the policies and rules and everything so that companies that are set up for distribution or that have great product ideas don't have to take years to get to market. And we also play in the embedded insurance space. So prior to that, I worked for HSB doing some other really interesting stuff. I was a treaty underwriter there, underwriting portfolios. So got very in depth into analytics and that sort of thing, and worked with we as a team worked with about 250 insurance companies nationwide. Myself, over 50 that I managed, and we did other stuff like IoT and things like that. They're a heavy engineering firm. So I've done a number of different things in my career, mostly before that focused on commercial lines, underwriting, and product development. So it's been interesting seeing the industry evolve as my career has evolved as well. And I'm looking forward to talking with all of you about that today.
That's great. Yeah, I mean, who better to talk about the state of the InsurTech growth than you? So thanks again for the little bio. We're going to talk about InsurTech and finish it off with some questions afterwards. So any questions that anyone from the audience has, please send them forward in the chat and we'll do our best to get them answered. And without any further ado, I'll pass it off to you, Chris, for the presentation.
Thanks a lot, Nick. All right, so I do have a presentation here, very high level, not going in depth into a lot of analysis and illustrations, but I put together some topics that I think are really valuable to talk about. So this is presented as the state of InsurTech growth. I understand you've had a few presentations on this in the past as the NextGen group, and what I'm going to do is I'm going to talk about InsurTech growth at a high level, and then I'm going to focus down in on really distribution, business model innovation, and disintermediation, which is a lot of where we play at Boost, and one big area of focus that I see kind of encompassing a lot of what InsurTech is doing for the industry. There are, of course, many areas of InsurTech. You get into claims handling and using drones for that type of stuff, and aerial imaging, and other types of augmented individual processes in insurance. I like to think high level, and like I said, this is kind of where we play as well, the business model innovation area. So I'll focus in on that. So taking that higher level view, InsurTech markets and the state of them today. I think right now we've seen a larger economic contraction, kind of, right? The markets are not doing great by most standards right now after being inflated for some time. I think it's healthy for the insurance industry. Now, not without its pain. Some great people have been laid off and stuff like that, and we've seen some really good InsurTechs start to struggle financially. The reason why I call this healthy is because I think when you have those high valuations and people chasing them, and some of the early kind of market forefront type of InsurTechs being the type that grow at all costs, and really focus on growth and then correction afterward. I don't believe that that's the healthiest way to approach insurance. It's kind of funny seeing some of this stuff, because from the beginning of my career, I remember people saying, InsurTech aside, if you're starting a new company, or if you've been a part of a long-lasting insurer that is heavily targeting a market or something like that, over and over again, people would say, it's easy to grow, it's hard to grow profitably. So there's plenty of opportunity to write business out there. We have some competitive markets, but you need to get it right. That's not to say that companies cannot grow and then correct. I've seen companies essentially buy the market by undercutting it and then correct. But having fundamentals in the right place as an InsurTech in particular, a startup that's trying to grow and gain a market reputation, you need to gain a reputation not only with your distribution channels, but also with the capacity providers, the reinsurers, and any alternative capital providers that are out there. So, like I say here, I think the fundamentals are really inexorable from the business. Those companies that have grown somewhat irresponsibly, be that as an MGA or a carrier, and growing irresponsibly at the sacrifice of insurance profitability, or if it's an InsurTech company that's not actually insuring and is offering services to insurance companies, if they've overhired and things like that, you're seeing those companies have to downsize and go through some pain. So I think it's a good relearning for the industry, and learning maybe for some tech-oriented companies and insurers that, like I say, had that growth at all costs. So how will InsurTech markets prove themselves? There are a lot of responsible InsurTechs out there. I'm proud to say that my company Boost is one of them. We focused on profitability from day one because we realized what an important component that is for our reinsurers and continuing to exist. So bring that point to reinsurers. How can reinsurers identify the right opportunities? I think it's tough because investors, they can, especially when the market was a little bit more inflated, they can take some chances, they can take some shots, but reinsurers are taking risk along with that, not just the money that they put in, but they can be paying out, many more times the premium that they collect, of course. So reinsurers, I think, really need to keep their traditional underwriting hats on while looking at the opportunity and how intelligently companies are attacking those opportunities. There are a lot of unique types of data. There is need in this industry for product evolution and for new ways of pricing risk, new ways of underwriting risk, and new products. And I think reinsurers I admire how eager they are to do a lot of that stuff, because our industry is traditionally conservative, and I think that companies are, and it may have taken longer than it should have to get here, but I think companies are recognizing that they need to embrace the future, embrace new products, embrace new ways of underwriting. And I'll talk a little bit more about that in just a minute. But they also need to stick to fundamentals and not get too excited about the growth. I think it's often easier to attack new channels and new types of products versus attacking traditional, really well-established markets, because those are highly competitive markets. So with all of that, how do roles and jobs evolve? I think it's an interesting time because we're seeing this enablement through technology, and we're seeing more sophisticated analytics. We're seeing the empowerment of underwriters like me who started their career as line underwriters to be portfolio underwriters and underwrite portfolios in a programmatic way, enhance your risk evaluation and all of that. So I'll talk a little bit more about that as well. Persistence of broker strength. This is really interesting. You know, even in the InsurTech space, brokers continue to control a lot of the commercial and more complex markets in particular, which makes some sense, right? The more complex risk and businesses who really want to control their risk want a consultant, right? And these are really entrenched distribution channels. So I think much like insurers need to embrace InsurTech while sticking to their fundamentals and being strategic about it, InsurTechs need to, in some markets, embrace the fact that they're going to be going through broker channels for a lot of their business. There are, and I do very much want to say that this is specific to lines of business. Certain lines of business, InsurTech is opening distribution. It's attacking brand new channels through things like embedded insurance and everything, which I dive into on the next slide. But InsurTech needs to also understand that that brokers do control a lot of business in the market. They have large programs and things like that. And there's an opportunity to be best at servicing those brokers and enabling them to do what they do best while still trying to make things somewhat automated. There are a lot of challenges there, but I think that's going to be a big determining factor in the winners in those markets as InsurTech becomes more and more dominant. And then the idea that a lot of people have talked about over time is disruption versus evolution in the insurance industry. And there doesn't seem to be, and I think a lot more people have accepted this, there doesn't seem to be true disruption. I think insurers have a lot of wisdom. I have a lot of respect for the insurance profession and what people have been doing for decades and some of the veterans in our industry that I have worked with. At the same time, I think they will tell you that there are pieces of the insurance carrier model and the distribution model that have been stagnant. So partnerships there, and InsurTechs have a lot to learn from traditional insurers as well. So that partnership brings an evolution to the marketplace. It brings new data, new ways of thinking, new distribution channels, and things like IoT or other forms of quicker interaction between risk and losses and the insurers who are evaluating it. And then aside from that, there's pioneering, which I think is a big part of where the opportunity is for InsurTechs, product evolution, those new those new distribution channels like embedded insurance and things like that, and then providing better data back to the reinsurers and capacity providers. So that's a high level view of InsurTech markets. And everyone, keep questions coming as you think of stuff. I'd love to hear what you have to say about all of this after a couple more slides here. But again, on alternative distribution, embedded insurance. I put this in quotations, and my company is a big embedded insurance leader. So we do things like distribute pet insurance through pet supply and pet wellness companies. So if a company outside of the insurance place wants to offer this product on their website, they can easily connect via API and say, hey, you purchased this product for your pet. Do you also want to buy insurance? So there is tremendous opportunity in that place. You think, when buying a home, what types of insurance products do you want? When you're buying crypto insurance, do you want insurance for your wallet? Or when you're buying crypto, excuse me, do you want crypto insurance for your wallet? Things like that. And there's a ton there. I mean, there have been existing channels like travel insurance and stuff like that have existed for a long time. But the level of connectivity that we have in our world today is going to continue to enable those things to be seamless. So access to coverage too. I've seen InsurTechs that target segments of the population that have been, underwritten and deemed as bad risks, but they find ways to target them as customers and find ways to make them better risks, find ways to better delineate what are the good risks within those segments that have been profiled as poor segments of risk. And that's done through data, that's done through better connectivity, that's done through deeper analysis. And then again, product innovation. There is so much space for product innovation. And by the way, going back to access to coverage, international insurance, I'm a big proponent for us, dissolving borders and trying to be more global in our industry, because the largest markets in the world, the largest unpenetrated markets in the world for insurance are abroad, are not in the US. So it's been difficult in the past. I mean, companies have certainly sold insurance out there, but it's difficult to market, especially when you get into smaller businesses and individuals. It's difficult to reach them. So you see a lot more of that happening. Things like parametric insurance to insure crops. You can't easily handle claims out in, some remote area in Africa as someone in the US. It wouldn't be cost effective to be sending claims handlers out there, but people can say, if there's less than a certain amount of rainfall in a year, we're going to pay you. So stuff like that is amazing, and there are more and more digital risks and tangible risks that need to be insured. So product innovation is one of the areas where I see InsurTech really growing in the future. Programmatic underwriting, this is what I do with a lot of my time. Create rules so that we can take in data on an automated basis and say, and decide whether we're going to write a risk and price it. So as I talk more about the evolving role of the insurance professional, this is a big theme. We're going to have people, and it's good timing because the insurance industry, by the way, which many of you know, is facing a talent deficit. So having fewer people, you need people to be able to deploy things on more of a programmatic basis, and that's very much happening in the underwriting space. There's a need for it. It changes the role. You need to be an analyst. You need to understand product and coverage, and you need to understand portfolios of risk as an underwriter, at least in the small to middle market, new business or commercial business space, and in the personal line space. But that's a fascinating job. I think that's something that's going to attract a lot of young people to the industry. There's a lot of interesting stuff in being a line underwriter. You see a lot of unique risks. You get to learn how agents are thinking. You get to learn how to help improve risks. But being a portfolio underwriter, you see the whole landscape. So I see more and more of our industry going toward that. And I throw this second point in there, underwriting through marketing, because this is something that I've talked and thought about a lot in the past. I think that we're going to continue to see companies underwriting through marketing in that they'll be advertising their products online, and the risks that they want, we'll see that product and be able to buy it. The risks that they don't see as good risks won't be advertised to. It's a different way of underwriting, but as things go more digital, there's a new way to connect with your target markets that didn't always exist in the past. And I don't know exactly how these companies do it, but I'm sure that companies like Progressive and Geico and everyone have been doing this for a while, but I see more of that coming. And then augmented underwriting and risk management. I've talked a lot about alternative data strategies, using unique streams of data. There are things like behavioral data out there. I'm familiar with at least one company. I think a couple or few companies out there are looking at web behavioral data to understand the risk associated with an individual or a business owner. Now that is, controlled from a regulatory perspective in a lot of places, but companies are going to start using that for certain products where allowable, and also for that underwriting through marketing. So it's parts of that are a little scary, but it's also really interesting to take these alternative forms of data and distribute to them. It's not something that I've had a chance to really dig into in depth, but I think it's fascinating. And I think it's somewhat inevitable that whether it's that behavioral data or something else, companies are going to really start looking at things that you wouldn't at first think as heavily correlated with the risk that you're underwriting, but you start to understand these connections. It's kind of along the same lines, at least that behavioral data one of using credit scoring. So active risk management, loss prevention. This is, the easy examples are telematics and IoT, right? You actually in real time see what's going on with a risk, and you're able to mitigate it. My former employer, HSB, has applications where you can see what's going on in real time throughout a facility, and it will ping the risk manager and warn them if there's, if pipes have gone below a certain temperature or things like that, and actively help tell them to come prevent it, or things that monitor the electrical signals in your walls and stuff like that. So there's that. I've seen we work with a company that does some amazing things with telematics and performs, because of that, much better in the trucking insurance industry than traditional carriers. Cyber insurance, which is a huge line of business for Boost and where I spend a lot of my time. There is real-time monitoring available, right? You can see what's going on in with a risk's web services, and with their whole attack surface, and you can see if they're being spoken about on the dark web. And you can warn them if you know that there's an attack going on a widespread basis, and there's to a vulnerability that they have, or to a web service or piece of software that they have. Cyber is going to continue to grow, and it is a fascinating line of business. So that's another one where active risk management is going to continue to grow. And then disintermediation. This is something when we talk about distribution channels, which is part of the theme of this discussion. There's a lot that can be done here. The people ultimately taking the risk, the reinsurers and any alternative capital providers, which I think there will be more of in the future, by the way, more capital markets involved directly, but they are going to get better and better data. Historically, a lot of reinsurers have operated by getting risk and claims bordereau on a monthly basis, often in a delayed fashion. In the future, they'll have more immediate streams of data and more robust data. And that's something that we focus on a lot at Boost, is being able to empower our reinsurers to understand our risk and also understand what we're doing from an underwriting perspective better than those traditional channels. And by the way, enabling markets, that better data and better illustration of what you're doing from an underwriting perspective gets reinsurers and capacity providers on board with what you're trying to do. If you're trying to write a new product or something like that, they can more quickly vet it, and they can more seamlessly monitor it over time, which really helps that collaboration. So what does the future of insurance hold? I think it's really important, going back to some of the themes from the first slide, that we embrace the wisdom of the traditional industry. and don't be irresponsible. There is a lot of complexity to insurance, aside from being, outwardly irresponsible about things and growing at all costs. There's a lot of complexity to the insurance industry. A lot of things that have been figured out. You see this even from the terms within a product. A product is an insurance product is a contract, and there are legally tested terms and conditions within them. There are coverages that seem innocuous, but that could be providing, substantial or exposing the insurer to substantial risk. So embrace that wisdom. I think InsurTechs really need to learn what they can from the existing industry, and that's where some have fallen short. With that, I think a lot have learned that, and I think that the new wave of InsurTechs, at least the new wave of those that will be the leaders and the faces of the InsurTech industry, are going to be better in that regard. So do that, but execute on capabilities. So embrace the wisdom of traditional insurers, but execute on the capabilities of InsurTechs, because I have talked with more tech companies, more companies producing fascinating, really intelligent, innovative products over the past year plus while I have been at Boost than I have in the rest of my career combined. And the capabilities of those companies are real. And the traditional insurers need to get involved with these markets. They need to understand what's going on from a tech perspective. And you need to do that in a strategic fashion. There are a lot of roads that you can go down that aren't going to come to fruition. So you need to definitely pick your opportunities, but explore and understand what's out there. And then look forward, along the same lines, looking forward in the face or the context of technological acceleration. I say embrace wisdom, but insurers, from an actuarial perspective and from an underwriting perspective, and from a strategic perspective, tend to look toward history to determine what's going to happen in the future. That works for certain lines of business, and it's really valuable. I don't think in the near term, for most lines of business, it's going to no longer be a data point or a super important point of reference. But we also need to understand, and this is something that I experience all the time, being largely focused on cyber insurance currently, is that the past doesn't necessarily predict the future. The risks that were dominant a few years ago may be different now, and maybe more importantly, different a year or two down the road. So we need to start seeing those things coming and have more foresight, which requires not just the traditional insurance function and actuarial backward-looking type of approaches, but you also need to model out what could happen in the future, and really be thoughtful about that. Control your product coverage and terms. So then the role of the insurance industry in the world's future. One of the things that's always prided me about working in insurance is that it serves a role of quantifying risk and financially disincentivizing bad practices. Now, there are things that I'm not crazy about how they're subsidized, like certain types of flood insurance and things where companies continue to build, or wind insurance where companies and people continue to build in places that are heavily exposed. But that aside, the insurance industry identifies those risks and puts financial terms around them to disincentivize poor practices. They identify ways to better engineer buildings. They identify, in cyber insurance, insurers empower CISOs of organizations to get more funding, because they say, hey, if you don't have a sophisticated cybersecurity practice in place, if you don't have these measures in place, we're not going to insure you, or we're going to insure you for 50% more, or whatever it may be. So they put, and in our worlds, everything is quantified based on finances, right? So quantifying risk based on in financial terms, and then actually putting those financial consequences or incentives out there to the world is tremendously valuable. And I think that the insurance industry can play a much bigger role in that. And I think that they will as we continue to be more connected and more sophisticated as a globe. Again, when I say technological acceleration up there really is such an acceleration. The more technology accelerates, the more it continues to accelerate, right? So we've grown and progressed more in the past decade or two than in like all of history, basically. So there's a lot coming, and insurance has a big role to play in it. And then the role of the individual. The way I envision this is a lot of what I talked about before. It's going to be bigger picture. When I look at people for my team and people I want to work with, I want everyone to see themselves as a product manager and want to have a role, or at least an understanding of all pieces of what the company does, what their partners do, because you need that context. It's becoming increasingly sophisticated. You need to skill up all the time, but it is also becoming more and more fascinating, and there's more and more of an interesting role. I don't think we're in the industrial model type of age anymore, where people are going to be kind of just serving as a cog in the machine. Instead, people are going to really need to understand things in depth, and it makes for a great career. So with that, Nick, I'm not sure how much time I used, but we'll dive into questions that you have and any questions from the audience.
Thanks, Chris. That was great. It was a great presentation and really interesting topic and talking points that you did a great job. And I want to give you a little time to grab some water, catch your breath. So I'll just talk for a little bit. So a lot of really good things. And please, any questions that you have, please send them in the chat. We'll take the remaining time to talk about some questions and dive into Chris's brain a little bit more about InsurTech. But one of the questions I had going into this session was year after year we see countless articles about funding numbers for InsurTech industry. We see the growth in funding, we see the decrease in funding, whatever. Recently, we saw a slight increase in the second quarter versus the first quarter of 2022. But you compare the second quarter of 22 to 21, and it's a decrease. Have we seen the summit of the funding? Is it going to continue in this slight increase, slight decrease? Do we see more companies coming in and getting more funding? What are your thoughts on this?
Well, I think it's driven by macroeconomic conditions, right? I think I called it in this presentation a healthy contraction. I think that things were inflated with some of the measures that our government took and everything during the pandemic. So there was very low cost capital that investors were able to deploy. And there's tremendous opportunity in InsurTech and in the industry. Mm-hmm. So they wanted to get it out there and take their shots while they could. So I think that, and I'm not prior to my current role, I'm not a startup guy career-wise. I'm interested in entrepreneurship and startups and all of that stuff. But I do tend toward believing in the fundamentals. I think that if you don't start out with those fundamentals, especially in insurance where you're taking risk, it's different than any other industry in that regard. Mm-hmm. If you don't start out with those fundamentals, you're not going to grow up to be a healthy adult as an insurance carrier. Now I'm speaking about MGAs and carriers in particular that are actually underwriting. Some of the other companies do some amazing things as well. And in those areas, I think that it's more of that macroeconomic cause where a lot of investors were putting out a lot of capital. They took a lot of chances and some of them failed. Whereas now they'll probably be a lot more conservative in the capital that they deploy. So to answer your question, in the future, I don't see this as the summit. Maybe some of the valuations and the raises were larger than we'll see for quite a while, but I don't think that that's a reflection of what investors think about InsurTech in general. I think it's more caused by the economy overall.
Got it. Yeah, I think that's a huge part of that. You see that pretty frequently now. Every day you see, or every week you see an insurance journal article talking about InsurTech funding.
Yeah, and as the industry becomes more responsible in the MGA carrier space, as some of those, I think people get enthusiastic about the tech side of things and they forget about those fundamentals of underwriting and profitability. And I think as they see some failures and some valuations decrease tremendously, we'll see a new wave of at least companies that are viewed as the leaders and the best opportunities in our industry.
Mm-hmm. So I'm gonna, I sent you a list of questions before. I'm gonna skip down to one of the bottom ones. I think this is a good time to talk about Lemonade. We can't really talk about InsurTech without mentioning them. We just saw their second quarter results, another net loss. Do you think they're on their way to profitability?
Well, I don't know. I'll say this though. They are one of those companies from my view. I mentioned earlier, I've seen companies buy markets and then correct. They did that in a big way, right? They really went for growth, collect a lot of data, and then figure it out. That's my view of them anyway. I think that can be executed. I'll tell you, they will need to do it fast to continue to get capacity and not run out of funding. You can only stay inflated for so long in terms of your investors' enthusiasm and that sort of thing. But they're a sophisticated company, so maybe they know. If you look at their and I obviously saw your questions ahead of time, and I looked at their earnings report and everything. If you look at what they say, they look at lifetime value of a customer, including lifetime loss ratio and stuff like that, and that's what they're putting out there. So if they are as sophisticated and if they're right about these things and how to better, and they've learned enough to better analyze their underwriting and their pricing and everything, they could correct. I've been preaching this whole call fundamentals and everything. So I think, like I say, they'll have to do it fast, and they'll have to be right. Basically, they'll have to be right about what they're putting out there in terms of the true lifetime value of a customer, the learnings that they've had from their analytics and everything. They'll have to be right to correct and survive in the long run.
Mm-hmm. Yeah, I think the purchase of Metromile is a huge win for them. I think that's going to help lead to that profitability down the road.
Yeah, and I was going to mention that's a sophisticated business. I don't believe that they're profitable either, but but strategically it's a good business, and they're doing some interesting stuff as well. Like I saw recently, they invested in in something similar to what I mentioned earlier, parametric climate change, like blockchain driven product. Those types of things are areas where to some of the points earlier, reinsurers need to understand the underlying value in products like that and how they're being underwritten and everything. But that said, those are some of the areas where there is tremendous opportunity because the markets are largely unpenetrated. You're doing things that are kind of groundbreaking, and you're accessing large international markets that are going to continue to grow economically relative to where the US and the Western world is and everything. So there's a ton of opportunity there.
Thanks for that. So, being, the Insurance Society of Philadelphia next generation, we're living and working through this great resignation, and our industry is being more populated by, millennial and Gen Z professionals. How much of an influence does this play into InsurTech startups taking a larger role in the insurance industry?
I think InsurTechs are attractive to millennials and everyone. I think, well, I think it makes a lot of sense as someone who is younger in this generation. And I said millennials, but I'm a millennial and I've been in the industry for 11 years. So maybe I'm not the youngest generation anymore. But I think InsurTechs offer an opportunity to learn quickly as a young person in the industry. You're trying out a lot of markets, depending upon what the InsurTech is, but you're learning about a lot of markets. You're seeing a lot of different opportunities. You're seeing how reinsurers think, because you're probably part of a smaller company and have better vision into that than being part of a large carrier. And millennials come in with really strong technical skills. We have some amazing people on our team who are able to throw together tools and things that empower us to do things a lot better and a lot more easily than I ever have been able to in my career. And it's a way to, early in your career, really raise yourself up and distinguish yourself, and learn a lot of skills at once. So and take a chance at if you get some equity, make a lot of money off of it, right? So I think there are a lot of things that are attractive in the InsurTech industry to millennials, and I think that they bring a perspective, being more technologically native than maybe some of the older generations, and being able to pull together platforms and tools. That our tech team is tremendous, and our insurance team is able to do things from a technical perspective that none of my other teams have in the past. So seeing that type of stuff and seeing the skills that people come in with, they're able to exercise them. They're able to learn a market. And then, hey, if in the future you bring those tools and skills and perspective to a more traditional reinsurer or insurer, they are embracing that stuff more. So it creates more opportunities for you in that larger market.
I agree with everything. Yeah, that the technical skills coming in, computer science majors and, more colleges offering insurance, like in getting the CPCU designations, and data analytics, you see more of that. So, I have a few younger brothers who are able to, have that more technical skill of that and show me tools how to use that. I think you're spot on with that part.
Yeah, I've gotten fascinated with analytics, but I haven't been able to develop my skills far enough. I do great from an underwriting perspective and working on finances and everything. But some of the people coming out of college have much stronger, deep analytics skills than I do. So it's impressive.
Blending that together is going to make a huge difference for our industry. But we're coming up toward a little bit at the end, but if you have any questions, please send them through. I have a couple more before, signing off. Are there any other trends that you're seeing working for an InsurTech that'll play a larger role, in a few years to come?
I would probably go back to that product innovation piece. I think that there's been a hesitation in the industry, and it's kind of a luxury over the decades and everything to try out new things, whether that's a new product or a new source of data that you use to underwrite. So I think that innovating in that regard, there are a lot of uninsured risks out there. There are a lot of new risks as the world goes more digital. And I think that InsurTech is empowering some of that stuff because they're interested. They see that's the nature of a startup, and the nature of a lot of tech companies is that they see an opportunity that nobody has capitalized on yet. And there are a lot of those in our world. There's risk everywhere. And there are new types of products, new ways of writing insurance contracts and interacting with the customer, and preventing risk. So I see more and more of that product innovation. It's not just about analysis and distribution channels. It's all of that.
Great. So I have one last question. Pretty big part of the industry is blockchain technology. And can you talk about some of the pros and cons of using blockchain? How does your company use it as well?
We don't actively use it today, but we insure crypto wallets, so that's interesting. But yeah, I see, I think that let's take the example of that parametric stuff I was talking about a minute ago. The idea there is once something hits a certain threshold, it's automatically paid out. So no claims handling. It's automatically paid, and that lives on the blockchain. That's really powerful. You can create contracts that automatically execute. So the expense reduction that's available there, and by the way, that's something I didn't talk about at all really, is in competitive markets, it's difficult to gain on underwriting margin alone without, or loss ratio, without reducing expenses. And there is tremendous opportunity to reduce expenses through blockchain technology and just to better organize data. So I see a lot of opportunity there. You need to make sure it's secure. You need to make sure there are no ways to exploit it. But I think that there's, as the technology evolves, there is so much opportunity, and especially across borders. It's a lot easier to make things function when there's a standard that isn't in one denomination.
Perfect. Thank you so much. And thank you again for, volunteering your time on a Friday afternoon in the summer to talk to, our virtual summer series session group. We really appreciate it. Anything else before signing off you have?
No, I would just say, thank you to everyone here. I understand there are a lot of younger people and interns and stuff in the group, so I hope that this stuff helps educate you. Don't hesitate to reach out and connect with me if you have questions, if you're interested in learning about anything here further. But no, it's been a privilege to talk with you all. Really appreciate the opportunity. It's been fun.
Great. Yeah, it was a great presentation, great conversation, just really digging more into the InsurTech space of our industry. Thank you everyone for joining. I want to thank our captioner Cassandra, Sarah, for hosting everything on here, Carmela again, and please join the NextGen Virtual Summer Series next week. I believe it's what makes our industry cool. Other than InsurTech and all the other sessions, there are a lot of other cool and fascinating stuff of our industry. So I hope everyone has a good weekend, and please join in for next week. Thank you.
Thanks.